Let's go to Alok Singh of BOI AXA Insurance, and he's joining us right now. Right. Alok, how do you see the interest coming back in broader markets? And do you think that it was actually writing on the wall that market had become so polarized, it would not have carried on for long, and that mean reversion had to happen?
Yes. So you have rightly said that the mean reversion had to happen at some point in time. But if you look at in a slightly broader thing, that why there was a large amount of divergence which happened, some of the reasons like the earnings not coming in, still is not addressed. We have seen price correction. We are hoping these things the earnings may come, and the way we look at it's yes, some amount of this time value correction, some value in terms of the price correction, some amount of hope theory, budget and all that. So this all has come together, and which is giving a broader push to the prices across the sector, across the market caps. But yes, it has to be followed by some amount of earnings coming back. And if it does not come, we may see this fizzling back. So I think it's an interesting thing to look at, but I think one need to be slightly cautious. You cannot just jump in by looking at the prices, because the broader thing because of which this corrected has not been addressed. Maybe budget has some answers, not fully. Some of the businesses have adapted themselves. They have got answers for that. So I think it is the first reaction. That's why we are seeing it with an exciting eyes. But I think we need to look at more deeper and be more pragmatic about stock picking right now.
Look, in fact, I'm glad you made that point. I wanted to know your view on one, ability of the government to act on personal rates front, ability of the government to really trigger animal spirits and address the personal consumption side, given the challenges on the fisc. Sure, they have made corporates happy by lower rates, taxes, but the citizens, do you think they'll address that?
Yeah, so that's an interesting conundrum, which if you look at that, other than cutting taxes, there is nothing directly which they can do, because anything which you look at from the policy initiative, and we have been seeing, listening about rumors of, private partnership at, at different level, viability funding, any other of, releasing FDI, and all these are all policy initiatives. They don't, kickstart things next day. And many of them, government may sound excited about, but the industry may not. So basically, if you look at other than the tax cut, there is no direct thing which they can do, or everything else will be indirect. So I think because the stage which we are right now, that the economy needs a huge push to come out of this downward spiral, then it has to be combination of multiple things. It cannot be only tax rate cut. It cannot be only policy initiative. And third is, the implementation, which we have always seen. So I think it has to be combination and in a very timely manner. In that, of course, resources are the big challenge, which everyone has been questioning. But I think in the broader framework, and as the governments globally has behaved, actually, if you look at, they have not bothered much about fiscal while supporting, and that's true for most of the economies. I think if India takes that path, I don't think people will should be much worried about it, as long as it is directed. It does not go to the socialist expenditure and generate some fixed assets and the job per se.
Right. Right. Alok, have you looked at the recent data which was being discussed in the market about how the mid-cap, small-cap valuation gap has actually widened a whole lot? The large-cap valuations are sky high or higher than the above averages, and mid-caps have actually been pretty low for some time now. And in the active market history since it opened up, it has only happened thrice in the last 15-20 years, and after this, after the point it actually happens in a couple of months, then next 1 year, 2 year, 3 year period is very good for broader markets. Have you looked at that data? Any thoughts on how the setup for broader markets appear right now on valuations for next 3 years?
Oh yes, the setup for the broader market is actually quite well placed, and last 2.5 years of correction has given us enough time for adjusting things on their own, if not aggressively. So that setup is right. But if you look at what led to this divergence, were two. One was obviously the liquidity and the flows, and second was the earnings not coming in, and that led to this bipolar market. So we are now talking about, probably with some amount of time correction, some amount of business correction, that reset probably has happened, and maybe in quarters to come we may see some amount of growth coming back. And if that actually happens, then obviously this rally which we are seeing right now can have a broader, a longer legs. Otherwise, it can fizzle out. But yes, is the on paper, is the things are looking right? Is the valuation looking right? Yes, it is all looking right. But if you look at, for me to give a growth multiple, I need to see those earnings coming in, and that is where I think is a bit of a question mark. Yes, you can look at the hope number and do anything, but I think since we are entering into earning season, I think the commentary here on from the businesses at large will let market form the view, what exactly they are looking at, because the numbers this quarter are not going to be that great. But I think the more emphasis will be what is the outlook, what the people are talking about the business.
Just hang on with us, stay with us. Maybe you want to participate in this discussion, but it's become an important talking point in the market right now. And we have Mr. Subramaniam of InGovern also joining in for a discussion on one company, along with Vivek Iyer, my colleague from the research team. And the spotlight right now is on Sterling and Wilson. It's a latest IPO which came in the solar power space. And there was very sharp value destruction after the IPO got listed, and everybody was confused. Later we found out that the promise made by the management regarding the usage of the proceeds of the IPO perhaps did not go that well, and now there is more insight coming in. InGovern has done some deep research out of it. We tried to reach out to the management a couple of times but have not been able to do so. Mr. Subramaniam, tell us from the start, what does your investigation/research tell you? Exactly what happened over here? Why did it so much of wealth destruction for minority shareholders take place?
Good afternoon. The IPO itself was a complete offer for sale of about 2,850 crore, right? And it was stated in the IPO prospectus itself that the promoter selling shareholders will utilize a portion which is almost 90% of the proceeds to make repayment of loans due to the company by the shareholders itself within 90 days from the date of listing. And the 90 days would have been November 18th. But on November 14th, the company came out saying that the promoters are unable to make the payments and they will reschedule the payment. So this, if you see the stock price movement post November 14th has dramatically dropped, and then that has led to a value destruction. And so in that sense, the promoters sort of held back on their promise to repay the company. It was fully owed to the company by the promoter shareholders, and they had already stated in the IPO prospectus that the amount would be utilized to pay the company within 90 days. So when the board did not sort of approve and accepted this restructuring, actually, in fact, this becomes a related party because it's a change of terms of a loan given by the company to the promoter. And I think that is also of consequence. And SEBI now has already started some investigation into this issue. And I think should effectively ask the promoters to provide an exit option to the shareholders. And we were looking at what is the solution to such a scenario. And there are enough case studies which we have put out in our report of precedents where SEBI has forced the promoters to sort of provide an exit option to dissenting shareholders.
Mr. Ronak, stay with us. In fact, Vivek, my colleague, has been trying to reach out to the management. Vivek, you have spoken to them earlier when they were, hitting the market. And you studied the entire issue, including talking to a group of minority shareholders as well. Tell us how you are analyzing the situation. And now InGovern, of course, has come out with a deep note on it.
Absolutely right. So the first thing that you need to understand when it comes to the Sterling & Wilson, it's quite a complicated structure that they have. So the main intention of the usage of the proceeds of the IPO was to go ahead and repay the parent company that was holding this particular arm. So Sterling & Wilson Solar was an arm of the parent company. Close to 2,500 crore rupees was what they garnered through the OFS, which they had to repay, within 90 days of listing. So the main bone of contention that InGovern has is that within 90 days of listing, they have been unable to repay the complete amount, which amounts to the company not following the SEBI regulations of actually using the proceeds of the IPO correctly. However, Sterling & Wilson Solar has taken cognizance of the fact, and what they have done is the parent, Shapurji Palanji himself, has actually come and said that they would be looking at repaying the debt of the company. And in fact, they have given indicative timelines of how and when the debt would be repaid. And also, the market buzz was, Ajay, as you would be aware, that they were actually selling shares in TCS to go ahead and help repay loans of this entire group.
Right. But Mr. Subramaniam, my question is, sure, this is a welcome commentary coming in from the management, but the wealth destruction has been pretty permanent. Do you think till the money that transaction is carried out, which was promised earlier, the minority shareholders will remain a short-changed lot? Because the market is not reading, or the stock price is not reading into those commentary very assuringly so far.
No, definitely the public shareholders were looking to this company's IPO from a perspective of being from a stable of a reputed promoter. But subsequently, the change in terms is what I think has pissed off the minority shareholders from a perspective of this rescheduling, which ideally is not even in the ambit of the board. It is in the ambit of the shareholders to accept and vote on such a proposal. This change in terms, the board cannot unilaterally take such a decision. In fact, I think corporate law case studies would be there. And because, and that is where SEBI has taken cognizance of this. Because at the end of the day, this is a delay of almost a year, which will happen now, because the balance amount is now rescheduled all the way till September 2020.
Right. All right, Mr. Subramaniam, we'll let you go on that one. Vivek, thanks very much for that. Alok Singh is still with us. Alok, very quickly, in the last 15 months, the market has been particularly punishing and harsh. Even there is a whiff of corporate governance issue or not very assuring transactions being conducted by the promoters. Do you think in the new environment where ESGs like stuff is being discussed, corporate governance will remain at top of the mind of the investors, be it institutional or retail, and the valuation in the market will be determined on how company conducts itself as far as these kind of transactions are concerned?
Yeah, absolutely. Because if you look at corporate issues around corporate governance, are being the biggest wealth destructor for the minority shareholders, right? And they need to be taken seriously. And one of the signs of maturity coming to the capital market, especially if we talk of our market and we say that okay, we are moving from a developing to a developed capital market, or more vibrant capital market, so to say, is that when these things are pointed out, punished, so that you cannot just short circuit minority shareholders. And I think all what has happened in last 15 months is a demonstration of that. And I think that is good for vibrancy of the market for the minority shareholder. And I think it should be done more often. And if it is not right, it is not right.
With us, let's also talk about the IT space where Infosys is coming out with results. Let's get in Sunita first to understand what exactly is Street watching out for in the numbers this quarter. Sunita?
We are expecting it to be a soft quarter. In dollar terms, we are expecting 1.5% kind of growth in revenues. If you see in constant currency, because of the weakness that BFSI space has, we are expecting the growth to be only 70 basis point, and we are also expecting cross currency benefits of 30 basis point in this quarter. Margins will improve by 50 basis point, and that will be some relief, because for last 5 quarters we have seen margins declining. So that will be seen as a positive for Infosys. As far as net profit is concerned, we are expecting a 4% sequential growth. But the things that we need to watch out is, one is guidance. Guidance, we are expecting slight uptick from 9 to 10% guided earlier to now 9.5 to 10.5%. That's largely because the ask for Q4 to meet that 9 to 10% is very, very minimal. So we are expecting the guidance will be upped. We will be watching out for their commentary on BFSI space, how the deal pipeline is looking there, how their digital performance has been in this quarter, and what they see in future. That will be very important. As you mentioned about the possibility of investigation report on the whistleblower complaint can be put on to the board this time. That will be watched very, very carefully.
Thanks very much for that, Sunita. Alok, what's your call on large cap IT? Bullish, bearish, or is it a neutral for you?
So I think we are a bit bearish on large cap IT at this point in time, and that's an underweight position in our portfolios as well. Primarily, as just pointed out, we don't see earnings coming in, any surprise coming in, on rather it could be a disappointment. Because if you look at, there has been a weakness in BFSI, there has been weakness in the retail side. Numbers have not been that great. So the only thing I think which could, the prices has moved up. So the only thing which can be is the forward-looking statements, which could be in terms of the deal pipeline or anything which has been, concerning specifically to the specific companies. I think those are the few things to look at it at this, and at the same time we don't see rupee also giving any support to them. We don't see it depreciating too much because of the flows which have been lined up and has been strong. So I think overall it would be a muted quarter, and I think something which is more in terms of the deal pipeline or any of other cost measures or something like that which they can pull up, which could keep the things exciting. Otherwise, we would remain, underweight to at best neutral. That's about it. There's no case for overweight position.
All right, Alok, we'll let you go on that one. Thanks very much for your time joining us on the show today.